Let's bring in Trivariate's Adam Parker now. He's also a CNBC contributor. It's good to have you here.
Good to be here.
You've been more negative lately.
Yeah.
Are you too negative?
I mean, today I am, for sure. But I just don't believe we're down 3% year to date on the S&P after 2 pretty monster years. And I think if you go back to January, I don't think people thought we were going to see what you guys just previewed, empty ports in Long Beach and pull forward in demand and tariffs at 10%. And I think the market rallied for 3 reasons, right? Some technicals, when the VIX came down, and I think maybe, optimism on some negotiations, and then maybe better earnings season. Like you didn't see any really tellable earnings. Visa said things were okay. Enough that earnings were fine.
Earnings
were good.
Were better.
They were better.
People thought.
They were better than I thought.
Guidance was better.
Better than I thought for sure. And so I think that combination gave us a big part of the relief rally. But I'm in the camp that there's damage that's done, meaning there's just a lagged effect between the implementation of the tariffs and when it hits some of the earnings.
That's what they said about when the Fed started to hike rates. Lag effect, the economy's going to go into the can, we're going to have a recession.
I don't know if we're going to have a recession. I just don't, if you talk to management teams of big companies, industrials, et cetera, just some spending slowed. I think inventory is going to build. I think production exceeds consumption. I think there's dislocation. So I tend to believe the companies when they say they're going to raise pricing. I don't.
Well, I mean, some already have.
Yeah, some already have. Yeah, and so,
on the show.
I wouldn't panic if, it was just autos and airlines that are, pulling their guidance. That's not that big of a deal. But I do think you're going to see it a little bit more broad-based. Low consumer confidence means some of the, consumer data will likely slow.
Doesn't always, though, right? I mean, that's the big question. Whether the soft data, the surveys, will translate and transfer into the hard data.
Totally. Look, part of me wants to say, look, I'm wrong, because the thing that usually is right is the price action, and that happens first. And then the second thing is the companies tell you stuff. And then the third thing is, 6 months later, the economists will tell you stuff. Like, we know the jobs data lags. So if you're waiting for that to get worse, the market's going to be anticipatory. But I just think this is a little bit of a shorter term rally. And then we're going to be left with bouncing around, between, 5,200 and 6,000 until we just get much more clarity on resolution on some of the tariffs. And the one that really matters is China. And I just haven't seen, a lot of progress there.
Well, there's been no progress, but the Treasury Secretary is going to be in Switzerland over the weekend starting talks.
That sounds great. I think last week he said he didn't even know if the president had talked to Xi.
I know, but this is happening. Right now we have some clarity. Yeah. There is a meeting. Yeah. They're going to be talking trade. So it might be incremental, but nonetheless, they're having meetings.
Yeah, I think that's right. And I think if you I think that's directionally positive. The second derivative of the conversation is positive. But we're down 3% year to date, and damage has been done already, and it's more than 3% in terms of the fundamental outlook. I mean, I took my 26 earnings and made it my 27 earnings just thinking 1 year of growth was out. So maybe that's 6%, 7%, 8% earnings growth. And so the market's acting like it's going to be way less than that. And we'll see. But I think it's not as easy as, hey, it's all over and we buy stocks because the president tells us so.
But you don't think that what he says, taxes plus deregulation plus trade deals equals, why wouldn't you buy stocks?
No,
I told you we're going to get all that. Why would you come up with a different answer?
What is the tax?
You're like I have a PhD in statistics.
Yeah, I don't think that math works. I don't think the math works. And, the president has gone bankrupt a few times. Like, every deal hasn't worked out perfectly. I'm saying he's got a track record for some investments that aren't perfect. I think that's a factual statement. And so I would say, he doesn't know. He's just trying to pump the market up and get optimism up because confidence is terrible. And I think the reality is that it's not that clean, okay? So what I would look for is companies that margins can go up in the second half of the year. Well, if they have rising input costs and can't raise pricing, in my lifetime, I don't believe Pepsi and P&G missed in the same quarter ever. There's real companies that are having problems passing on pricing. I don't know what he's talking about. So I think you're going to see that roll through more of the market later this year. And I just think you got to be careful. So on the defensive side, I'm really trying to find businesses that are tariff-free, China-free, have pricing power. Waste management or, aggregates like Martin Marietta or Knife River or, Vulcan or, maybe it's the drug distributor. Things that I don't think their earnings estimate achievability is fouled up by what's happening. And then if you got to buy offense because you just got to participate when you have these big up days, then you got to take your shot at, is it the alts with, KKR, Blackstone and Ares or Apollo? Is it Dell or something that maybe if there's an upgrade cycle, you got to find some offense. I'm not saying this is like an apocalypse. I'm just saying it's not as easy as we damage things, no problem. We're down 3 after being up 50 and life is good. I think that's a little whistling by the graveyard for my current mood.